From understanding the illegal cigarette consumption in India to the Sarva Shiksha Abhiyan. From understanding the e-Chopal concept for the farmers and the agriculturists to understanding the 5-star hotel business of ITC. We learned a lot of things in yesterday's video. But like ITC is incomplete without cigarettes, my video is incomplete without finance. So to know about the financial aspects of ITC, check out the full video. Till now, we have understood all the business verticals very carefully. But like in a cricket team, every cricketer has to play his or her own part so that the entire team as a unit wins. Similarly, in a business, if all the business segments perform very well, then a company as a team wins in the financial match. So let's understand what are the different business verticals and how much do they contribute to the entire business. If you check out, what I've done is I've compared 2017-18 with 2018-19. The cigarettes business, which contributed 47% of the revenue in 17-18, has now gone down to 42% in 18-19. So there's a 5% drop in the revenue as compared to the previous year. In FMCG, if you can see, so basically what has happened, 5% drop in cigarette sale on a year-on-year basis. This 5% has to be compensated somewhere else. Where has it been compensated? Here you can see there's a growth in FMCG by 1%. There's a 2% growth in agribusiness. If you can see in the paper and packaging sector, there's a 1% growth, and in the others, there is another percent growth. So the 5% reduction in cigarettes business has been compensated by all other segments. Now coming to the profitability perspective, this is something very interesting. With 47% of revenue in the previous year, which was contributed by cigarettes, 47% of the revenue gave a weightage or contributed to 86% of the profit before interest and tax. This is something which is very hard to digest. So one more time, 46%. So out of the total revenue, ITC's share from cigarettes for the revenue was 46%. But out of the total profit, 86% profit is contributed by the only cigarette segment. This 86% has gone down to 85% in the current year. So here you can see again, 5% drop in the revenue caused to 1% drop in the profitability. If I talk about the other businesses, the agribusiness 5% has gone down to 4%. Paper packaging from 6% has increased to 7%. FMCG has increased from 1% to 2%. Hotels and others have remained unchanged. But now you might have understood why I have spoken a lot about cigarettes as a business product in my previous video and also a little bit in this video, because I understand that it's a sin product. But if the cigarette sale for ITC goes down, then that is going to majorly impact the profitability of this business. While we are analyzing any company, it's not important just to check current year versus previous year. To get a better idea, it's always good if we do an analysis of the past 5 years. So here we're going to talk about ITC revenue profitability growth over the last 5 years, that is from March 15 to March 19. The income has grown from 38,834 to 48,352, of course rupees in crores. Here the overall growth, I can say CAGR, I can say. So CAGR is what? Compounded annual growth rate is almost 6.32%. What does it mean? It means that on an average, the revenue has grown by 6.32% every year. Now question is, if sale has grown on an average at 6%, how much has their profitability gone up? Profitability, if you see, was 14,362 crores in March 15, and over the period of years, it is now standing at 19,138 crores. This means that their profit has gone up by almost 7.05%. CAGR I'm talking about. So on an average, their profit grew at 7.05%. So that's a fairly good thing. That's about the overall 5 years profitability. But what is again very important in analysis part is some key ratios that we have to discuss. If you check out the dividend per share was 6.25, had gone up to 8, 4.75, 5.15, and in the previous year it was 5.75. I thought of covering this point because from the next financial year, that is 2021, dividend is going to be taxable in our hands. Till the year ended 2020, that is March 20, whatever dividend we get would be exempt till 10 lakhs. Okay, so this would be the last year to enjoy dividends without paying taxes. So that's why I thought of including this section. So after Q3, any company which is paying out dividend, grab it. That's the last opportunity to get it as a tax-free income. So I may say that yes, flat dividend throughout the last 5 years, they have given fair enough dividend, I can say. So good enough. If you just check here, one more important point, which is the return on capital employed, ROCE. In simple words, I'll tell you what is that. How much capital was invested by the businessman and how much return are they going to get on that? As a simple example, if I have invested 1 lakh rupees in my YouTube business, I got this studio. 1 lakh is very less. This is just an example, okay? So if I've invested 1 lakh rupees in this studio and assume that I'm getting 10,000 rupees from YouTube, let us say this is a year on year. So how much is my return on capital employed? My capital employed was 1 lakh for the studio and I got how much? 10,000 rupees. So my return on capital employed is 10%. This is a very crude way of telling you what is return on capital employed, because there would be so many other incomes or so many other points which would be included in this. This was just for you to get a fair enough idea. Okay. So for ITC, the return on capital employed was 45.74% in March 15, and be aware, from 45.74 it has gone down to 45.6 to 34.22 to 32.14 and to 31.88. So return on capital employed is continuously going down. Why? You should be able to tell me why. Because the profitability of which segment? Cigarettes business. See, the more and more the cigarette business is going to fall, your return on capital employed is going to go down. Okay. Current ratio basically tells the liquidity position. Over the years, it has improved from 1.45, it has come up to 1.8. As far as the debt coverage ratio is concerned, I'll tell you in simple words, it means that its debt position is very much in control. In fact, it's almost a debt-free company. It's a very much cash-rich company. So no need for ITC to worry about liquidity. Well, their inventory and debtors turnover ratios are also very good. Do let me know in the comment section if you are aware about what is an inventory turnover ratio, what is a debtors turnover ratio. If you don't know about it, just let me know in the comment section if you want me to make a separate video on what are these two ratios and why are they important in company analysis. So let's understand about the Q3 earnings of ITC. They recently declared their Q3 earnings, and there is something very nice point to learn from this. I generally try to make at least one new point which I would not have been easily able to find it out. I try to dig down deep, try to do some research, and I try to make it a point that I at least tell you one special point in every single video. And here's what you're going to check it out now. Normal points se start karte hain. First, the normal point is that their revenue. First, I'm going to talk about revenue as compared to Q3 2018, Q3 2019. Okay, if you do a comparison, it has gone up from 11,340 crores to 11,912 crores. If you check out the profitability, which is I'm talking about profit after tax, their profitability has gone up from 3,209 crores to 4,141 crores. So a very decent jump in the profitability as well. But I want you all to have a close look at one of the items here. I hope you can see this 132.11, and here you can see that in the brackets, right? And it is given here that it is an exceptional item. Now let's understand what is this exceptional item. In any company's profit and loss account, first you have to talk about what is the income, then you have to talk about what is the expense. Then you see profit. So how is profit calculated? Standard 2, Standard 3 mathematics. Income minus expense is equal to profit. But here if you see, very clearly it has to be written profit before exceptional items and tax. Then you deduct the exceptional item and then you get profit before tax. Now what is this exceptional item? The name itself says it's exceptional. Means it is not going to occur in your day-to-day business. It's not going to be a part of your main business. When I try to check what was this 132 crores loss, because the moment it's in bracket down there, it means that there's some kind of loss or some kind of expense which has occurred. After getting, after doing a small research on that, I found out that this loss is due to a fire which broke out in one of the third-party godowns. What do we mean by third-party godown? It means that ITC did not own that godown. They had kept their goods in some other company's godown. Question is, which products? Products were tobacco leaves. Okay, these tobacco leaves were kept in some other godown, some other company's godown, and there was a fire which occurred there. This fire led to a loss of 132 crores. Wow. When I read that, of course, I know the importance of insurance. I have very well covered myself with insurance. But I think this is an alarming point for you all. If you have not covered yourself for insurance, do make it a point that you insure yourself. Please note, I am not an insurance agent. I am not going to earn any commission if you take out your insurance. This is just for your well-being that I'm telling you, that all such circumstances don't come with a prior intimation, right? So if this is the case, if a company can incur such a big loss, question is, did ITC have their insurance or not? Answer is yes, they have their insurance. They have filed a claim and they are hoping to get a claim from the insurance company. I always say that any research done by yourself is the best. But then, for some people, it becomes a little bit difficult for them to manage the research part as well as their work. So for those who don't have enough time from your work commitments, I feel solutions like small cases could be good for you. Basically what they do is they have certain ideas for you. So just as an example, I'll tell you, Budget 2020 is one of the theme that they have done right now. So I'm just clicking into Budget 2020. Here you can see they have given sub-themes like rising rural demand, affordable housing, smart cities, infra tracker, transforming India. All these 5 sub-themes are a part of a main theme, which is Budget 2020. So if you don't understand individual companies, or if you don't have time to do an individual company analysis, but if you have a base logic, like just as an example, if you feel that the rural demand is growing right now and I should be investing in companies who have who could definitely benefit if the rural demand boosts up. So you can see the link in the description box if you want to buy a small case. By the way, small case is linked with various brokers including Zerodha. If you also want to open an account with Zerodha, you can find the link in the description box. So small case, you may say, is not exactly equal to, but a little bit similar to mutual fund, wherein you can invest in an idea, a theme, rather than investing in a single stock. So let's come to the most interesting part, which is the valuations. And we have done the valuation as per 3 models. One is EV/EBITDA model, one is revenue multiple model, and one is PE multiple model. We have given weightages of 40, 40 and 20. And if we take a weighted value, then the expected price with a 1-year target comes up to 274.216. But what I've done, I have again discounted this by another 10%. For a simple reason, because ITC is still predominantly into sin goods. Sin goods is basically the cigarette business. And because of this sin element, the price may not move at the same speed which we expect to move at. So that's why the expected target price of 274, I've still discounted it by another 10%. You may ask, why 10%, why not 15%? Okay, you do a discounting of 15%. Okay, so whenever we talk about valuations, there are a little bit of assumptions involved. So I personally felt that a 10% discounting should be fair enough. I've taken an additional 10% discount for that. So the target price, estimated target price could be around 247 rupees. Today, as I'm recording the video, the share price is around 213 rupees. So still from here, there is an upside of almost 15%. Well, I hope you have enjoyed this complete analysis of ITC, including the part 1, which was about understanding the business model, and part 2, which was about understanding the financials. As always, I have to tell this, that I am not a SEBI registered resource person, so I'm not allowed to give direct recommendations. What I put on YouTube is my research, my study. I always have to tell this, that you have to do your own research, your own study, ask your financial advisor, and then only invest in any company. But as far as ITC is concerned, fundamental analysis only tells you, is it a good company to buy or not, but when to buy is answered by technical analysis. So also do a technical analysis on that and then decide whether you're going to buy it or not, and if yes, at what price, right? So I hope you're enjoying this part 1, part 2 content. Generally, I saw that not all people are repeating my part 2 content. So if your friends are not seeing part 2, tell them to watch part 2 also. Don't be lazy. Don't watch only part 1. Part 2 is very important. Understanding financials is very important, right? So just let me know in the comment section if you have any other suggestions for me. You can see one more join button below. So just have a look at the memberships. You can take your own call. And if you're liking my videos, do consider sharing it with your friends and consider subscribing to my channel as well. That's it from my side for the day. Jai Hind. Bye-bye.